And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast. May as well be the weather forecast. If we get any more rain around here, I'm going to have to swim out of here. So I thought I'd start the day with a little CCR. Full stop the rain. Tuesday, May the 3rd. I'm John Hoagland. Thanks for trusting me with your time. It's Make Hoag Money Day. I'll send the link in to register. If you want to join us, please do. As always, on the market forecast and the weather forecast here this morning, we're focusing on accurate context, good risk management, and patience. I think patience is really going to be one of the most important things we're going to have to exercise today, if it isn't already one of the most important things. As far as economic numbers this morning, we all are well aware that the FOMC meeting begins today with the release tomorrow at 1 p.m. Central and the share presser at 1:30 tomorrow, 1:30 p.m. Central. As far as stuff coming out today, 9 o'clock, we have factory orders and the beginning of this week's employment numbers. The job openings and labor turnover survey comes out at 9 o'clock also. That's pretty much it for important economic information. Of course, there won't be any talking feds there because they are busy in their meeting. So we are sitting here just waiting to see what happens. Do want to apologize. Last night there was no recap. I had lost internet several times, and by the time it came time for the recap, I still did not have internet. It seems like things are better now. The internet provider said a couple of weeks ago they were going to be working on some things and there might be some short breaks in service, and I thought by now that 2 weeks that would be enough, but apparently no, they wanted to step on the recap last night. So hopefully we'll get everything done today that we want to get done, including the coach's playbook at 11:30. We'll be talking about taking responsibility. And then, of course, after the forecast this morning, we're going to have Make Hoag Money. And then, of course, we will try and get the recap done for us all today. As far as things people are thinking about, talking about what I'm looking at in trading today, U.S. stock indices were going to lower earlier. It looks like we're going to be opening steady to higher after that late afternoon rally. Pulled prices away from the cliff. Earnings in focus today. We had Pfizer came out, of course. We knew that was probably going to be good. BP, mixed numbers. Hilton, some mixed numbers. AMD, Airbnb, Starbucks, and AIG after the close today. Nothing wildly impactful, but we do want to keep an eye on what's going on with the earnings. Crude prices have eased off the highs a little bit from yesterday. Prior to the API, which is this afternoon at 3:30, and the EIA releases tomorrow. And, there's still a lot of uncertainties remain. We know that there's a war going on in Ukraine. Lots of lockdowns in China. There's still so much going on in the world. It seems like there's just too much to digest. And I think that makes it even more important to remember to trade what you see. You don't want to get mixed up and lost in a bias that isn't paying you. Make sure you are trading what the information that the market is giving you. And of course, remember to pray for peace. The VIX this morning off a little bit at 31.96. The dollar index down slightly at 103.16. And the yield on the 10-year just under 3 at 297, up a little bit from the close from yesterday. As always, make sure you like, share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast, Market Recap, everything we do here. And make sure you can subscribe to our YouTube channel. You get notifications of forecast, or if I'm just crazy and don't remember. Frederico, Shaw, good morning. Scott Saw, and he conquered. J Trades, Glimma Sandwich, Glitter Sandwich, good to see you. Yes, S&ES was a little wild yesterday. It kind of forced me into some earlier trading, which I usually don't like to do on Mondays, but it turned out to be a good thing. Keith, good morning. Terry, Jocklo, Bill, Devon, Tachyon, good morning. George. Lacey's sitting here right next to me. Lacey, George says, good morning. Devon, was that enough of a push to be a late spike in the ES? No, it was not, but it was in the Nasdaq. We're going to check this out on the charts shortly. Good eye, though, Devon. Marcelo, good morning. My brother Rick, love you. Vince, good morning. Zachary, good dawn, everyone from Sarah Hall. And prayers and love to you as well. Expediter Dean, Kirill, Shaw, Rick, and liking the CCR. Zachary, good morning. Charles, Expediter Dean in Muskegon, Michigan, and it's pouring here too, man. Yeah, it's we got quite a deluge going on here. I think I'm going to be swimming away. Joe, did you do a recap last? Nope, I did not. Sorry about that again. It was really nothing I could do. It was too late to get somebody else to prepare for it. So we'll just deal with our gremlins. Brody from the Olympic Peninsula. Rusty Golfer, good morning. Yeah, Rick with the gremlins. I want to make Hogue money, bottle up some of that rain and send it out here to L.A. where, oh man, that would be, I would do that if I could figure out how. We need Elon Musk to figure out how to siphon some of this water that we've got around here out there. Just Kareem, good morning. Zarain. Nico, good morning. Stephen Swan, good morning. Ghost-a-Face, good morning from South Africa. Wow. Welcome. Glad you're here. Rational Investor, good morning. Top Steppers, good morning to our good friend David and Three Lions Insight. Here's the link for Make Hogue Money today. Go ahead, register. We're going to do it right after the recap, probably about 8:20. I'm going to try and be in the room and be prepared for everybody. We're going to be going for an hour today. We're going to go from 8:20 to about 9:20, 9:25 for Make Hogue Money this morning. So maybe that'll give us an opportunity to relax a little bit, not be so jumpy to take trades too early, and see if there's a trade that we can agree on that we can take to make me some money. You know I like that. All right. So without further ado, let's jump into the charts and see what we're seeing here. And this thing is still running. Still got the music going. All right. Let's jump in. All right, so this is the daily on the E-mini S&Ps. We start there usually. So it's been pulled off the cliff yesterday. It's pretty good excess on that daily bar, isn't it? I mean, that's some pretty good pullback off that low. It doesn't change the overall structure of the market, which is still to the downside. My question is, how well did it perform? Did we accumulate some new longs off that low? And according to open interest, we lost 30,000 in open interest. So that leads me to believe that rally, that pulling us away from that cliff has only delayed what I think, what we all think might happen. We saw some open interest losses on this bear flag that we broke out of on Friday. We lost 30,000 in open interest, pulling this market back off that high, or off that low, I should say. Open interest has been consistently higher on down days and lower on up days. So that leads me to believe that this rally that we accomplished yesterday seems to be a little bit hollow. It doesn't mean that things can't change, that this market can't turn around and head back to the upside, but it's going to take some new business for that to occur. It appears as though right now where I'm sitting that the downside auction seems healthy. Brian Davila, good morning. And JD, it's good to see you this morning, sir. So here's the 30-minute. Our weekly kickoff 40-48 approached relatively closely yesterday, but not enough really for an execution before this thing really turned around and headed back to the upside. Again, losing open interest yesterday doesn't impress me to the upside. The settlement price, 41.51. There it is. Do we have any overnight inventory? No. Nothing really to lean on. Are we opening with a gap? Well, there's a possibility that we could open with a gap. We're going to see that and make whole money, and we're going to see if we can't find some decent opportunities. I'm kind of liking the fact that we may be out of balance in the day time frame for when we open here at 8:30. But as far as overnight inventory, we've got nothing to lean on. So I'm going to be thinking I need to try and stay a little bit patient. I'm not interested in doing anything pre-open here. But if we can open with a gap and can't close the gap, then maybe we can see some continuation to the upside here. If we can't break out of the range from yesterday, there's still some potential repair that's still left here from Friday. But we're going to have to hold above the high from yesterday for that to happen. I got to stay patient. We know the FOMC meeting. We saw some potential possible support here down near weekly kickoff low, but that's a substantial downside move to take us down to that. We're going to see what happens here and make home money. Here's the crude oil, still coiling, still in short time frame control. We had a build in open interest yesterday of approximately 6,800. Volume seems to be maintaining. So we're really just kind of stasis here. We got volume kind of even. We've been up and down a little bit with open interest. We're still in this area of coiling activity. Are we in a rush to do anything today? Take a look at the 30. So here's our day yesterday. Some pretty short overnight inventory from Sunday night. That overnight inventory, I believe, is a big part of we got too short in the hold down here. We had to come back. We had to reconcile. Brought price back to basically the open from Sunday night back to settlement. We did take out a couple of naked points of control. So this market still, when it does that, it is certainly giving signals that it is in short time frame control. When it just cleans up old business, that's what short time frame traders do. We're going to be looking for opportunities to use short time frame levels or information with which to look for opportunities. We take a look at this yesterday. We opened through 2 naked points of control. It was right away that we checked this naked point of control in regular trading hours, then this naked point of control in regular trading hours, and look at the high volume node that was created right at that level. So lots of trades changing hands at important daytime frame inflection levels. What are we looking at? Well, we're looking at another potential repair day. Looks like we're opening in the area that would bode for repair between the high volume node that occurred early in the session and the high volume node that occurred late in the session. We've got our opening range just opening now. And we're in the middle of value. So I'm going to be patient today. I'm going to look for opportunities at the point of control above price right now, and probably down here right around this level here, this high volume node, to really kind of focus on execution entries. Anything in the middle here is just kind of a random walk to see if there's business that is left to be done in this area. Getting word, mom's watching. Everybody, hide the liquor. All right. So let's take a look at the first minute here. The opening range. Opening range. Some people look at it a little differently. Some people look at it as a 30-second opening range, maybe a 5-minute opening range. I kind of focus on the first minute. So we've got the opening range established 02. So approximately, this is kind of a smaller one, 23 ticks. If we leave the opening range at the high of the session, then I would see that I could see this market rotating back down to check that high volume node that we were just looking at on the 30-minute chart down below. Down here. And a return back to the point of control from yesterday. So the fact that we've opened between these two high volume nodes, I believe increases the probability of repair throughout the day today, where we're going to check down to this level and up to this level at some point in the session today. Only time will tell. Here's the Nasdaq. So we looked at the S&Ps. Well, let's take another look just real quickly, because we do not have a late spike. Okay, here's the high from the session all the way back here on the 930 bar. We didn't take out that. We had a pretty volatile move to the upside, but failed to take out the high of the session, which we would need to do if we were going to be creating a late spike. However, in the Nasdaq, we did do that. We did create a late spike. It looks like we're going to be opening above that late spike right now. Well, at 8:30. Downside intact. This is a more range-bound market than the S&Ps. We got 1, 2, 3, 4, 5 days where we're kind of hanging around here and in a little bit range-bound. We've had 2 days of really kind of inert open interest changes. We added 250 in open interest yesterday. Not a big number in either direction. Okay, the low that we put in yesterday follows pretty much to the trend line that we put across these two lows. Now we've got a third point of contact down there after it found a degree of support down there. And just below that, we have our weekly kickoff low. Take a look at the 30. Okay, settlement, 13,073. Put that on your charts. The big move to the upside did take out the previous session high. So we do have a late spike here in the Nasdaq. That late spike, the base of it is 13,046 and a half. So if we can open with a gap, that's going to probably be the friendliest to the upside probability. The kind of where the late spike began is the low of that bar, which is the start of the late spike, 12,953.75. So a couple of different areas for possible support within this spike, but the best case scenario, I think, would be for us to open with a gap, not be able to close the gap, and to leave the late spike alone and push to the upside. That would be a best case scenario. How often do we get our best case scenario? Let's take a look at gold. Okay, short time frame downside structure. Are we starting to show open interest slowing? We lost 600 in open interest on that push to the downside yesterday, while volume remained relatively high. Last Friday on a push to the upside that was kind of rejected. We added 2,600 in open interest. Yesterday on this big down day, we lost 600 in open interest. Are we losing interest in pushing this market lower is my question. We did put in some decent volume. We've tested largely to our weekly kickoff low here from in the overnight session. Overnight inventory, we've got nothing. Here's for 1848, our weekly kickoff low. We've got a naked point of control down here that we may go visualize and touch. It got touched when in the extended trading hours, but we're sitting here right in the middle of range, right in the middle of value. I'm going to really try and stay patient here. We're sitting at settlement, which is 1863.60. I don't see that there's any real good reason to get into anything, especially at this level. I'm going to be focusing, of course, the weekly kickoff low. If we can break out above yesterday's range and high, then we've got a whole bunch of space above with which to go and close that gap, which we created from Friday to Monday. Lots of naked points of control, lots of visuals above for us to go back and clean up a little bit. So I think my dream level, of course, is going to be weekly kickoff low. If we can hold it, we look to go higher. If we can't hold it, we look to go lower. Here's the euro. Euro has gone on a little bit of a tear this morning, although we are still largely holding within a 4-day balance. We added 700 in open interest yesterday, but look at the volume. It almost looks like this is a display error or something. So we've got 4 days in balance. Balance rules. We fade the extremes of balance till we get a breakout that accepts, and then we go with the breakout of balance. We got the dollar, still up above 103. Here's the 30. Okay, I think we have a few longs in this market right now. Here's the upper extreme is basically this gap right here. 1, 2, 3, 4 days in this area of range. This is an opportunity for us up here. There's fish up here, folks. Either the market is going to fail and pull back into range, or it could break out, hold, bring in volume, and continue this move to the upside. But in either direction, this situation, this location allows you to A, limit risk, and B, trade in an area of previous rejection that may be rejected again. Either way, I like the fact that this is a good risk limiter, and we've got balance rules. We fade the extremes towards the center. Breakouts, we go with what is a solid breakout, what indicates acceptance outside of this 4-day balance is, of course, subjective and one of the difficult things that we get to do as traders. Let's look at the 10-year. So the 10-year is going to be one of the stars tomorrow, of course. FOMC meeting. Anything that they're expecting should now certainly be in the market. So we just sit here and wait for something unusual to come out. Yesterday on this push to the downside, some again very low volume, but we did add 38,000 in open interest. Not a huge number for the 10-year, but it does kind of say that the downside auction is kind of healthy in open interest, like people still willing to sell it, but the volume terrible yesterday. 30-minute chart. Settlement down here, 1:18 and 11:30 seconds. We had some really kind of mild overnight longs that seem to be continuing to get paid. This purple line is last week's low. You can see how this market has been just stair-stepping lower. Do you think there might be some profit taking coming at us here a little bit in this market today? Wouldn't surprise me. I know if I had a big profit in here, I'd be thinking about taking some profits before this meeting tomorrow. In that gas, we've found our upside legs again. The upside continuation has now picked up a little bit of speed. We we lost 1,000 in open interest yesterday, but now we've pushed the market towards an important inflection level, i.e. the weekly kickoff high, 792. We're holding up above it now. Take a look at the 30-minute chart. Got a whole lot of overnight longs in this market, and those overnight longs, at least for now, are expecting to continue to get paid. We've got one-time framing activities from the beginning of the European session pretty much, and we are holding up above an important inflection level. So if we can hold up above weekly kickoff high, I look at that as an opportunity to look for longs. If we can't hold weekly kickoff high, that might be just enough to scare some of our shorter hands, short time frame, weaker hands traders from getting, it may scare them out of some of these longs that they're holding and give us a better trade location to the downside. All right, so we've got our tasks set out for us. Hide the liquor. You can't. You can just share it. Yeah, there you go. I'll just share it then. I know Mom would like I'm sure a glass of wine. Dan Trader, please keep my wife in our thoughts. Has a post-surgery follow-up today and biopsy results. Good luck and make hope money. Dan, of course, we are all going to send our strength and prayers and love to your wife. Hopefully things come out the best possible. Okay. Chilling with Dylan is at the Deftones concert last night. Probably won't trade till this afternoon. All right. Well, I'm going to get things set up for Make Hogue Money. I'll be in there just about 8:20. Hopefully all set up. Dan, your thoughts, your wife, your prayers, you've got them. I'll be thinking about you all day. Feel free to send me an email if you'd like to, jhoagland@topstep.com. Let us know how things go, please. You've got our prayers. Let's take our deep breath. Stay humble, grateful, and creative in your trading today. Looking forward to seeing everybody at Make Hogue Money. I'm going to get set up, and I will be in that room at 8:20, raring to go. Not raring to go. Just waiting for the right opportunities. That's what we're going to do. So looking forward to it. If you're not coming, trade well today. Take it easy. Get out there and profit. So we'll see you in a couple minutes.